Hey guys, welcome back to Reserved Investments on YouTube. It is back from the gym, Sean, here with another video. Yes, my hair's a mess. I just did 5 miles on a treadmill and I spent another 45 minutes lifting weights. So this is not shower fresh Sean, which means we are doing another important white poster board video. So today we are going to be talking about the risks and rewards of investing in antiques versus that of investing in collectibles, the pros and cons of each. Now, every time I do a video like this, somebody says to me, Sean, you have to find another way to do these videos because I can't read what's written on the whiteboard or the white poster board here. That's okay, because I'm going to go through and I'm going to read each one of these pros and cons to you, and we're going to do a comparison as to why a well-balanced portfolio devoted to alternate asset investing in the overall antiques and collectibles trade should, in theory, contain items from each of these different markets in the trade. Meaning your portfolio, if you are investing in antiques and collectibles over the long term, should contain both collectibles in it and also traditional antiques. Now, this gets a little bit murky because certain markets in the antiques and collectibles trade strata both the antiques and collectibles trade. For instance, if you are lucky enough to own certain vintage sports cards, like an Honus Wagner card from the early 1900s, that particular item has elements of the antiques trade built in because it's more than 100 years of age or older, and it also has elements of the collectibles trade. The same is true for most graded coins, most graded pieces of currency that are 100 years of age or older. So when you invest in certain markets in the overall antiques and collectibles trade, believe it or not, there's a couple where you are actually investing in both the antiques and the collectibles trade. Because even though if I hold up a 100-year plus coin that's graded by PCGS, yes, it's true. By definition, that coin is an antique coin. But the market that coin operates in is more likely to be on the collectible side of the trade, meaning heritage auctions, Stacks and Bowers. There's tons of dealers that pretty much cater to that market that make that market extremely liquid. Now, when we talk about investment grade antiques, one of the things that you got to understand is that in certain cases, a lot of high-end investment grade antiques that are not third-party graded are less liquid overall than that of collectibles. So when we analyze these markets, you must understand the risks and the rewards of buying and selling and investing in antiques and collectibles over the short term and over the long term. So that is why I am doing this video today. So we are going to start on the antiques side of the spectrum. We're going to go over the pros and the cons of getting involved in these markets. Then we're going to compare it to the collectible side of the trade. And we're going to talk about the pros and the cons of investing in collectibles. And I'm going to show you how these markets are uniquely different, what they have in common, and also why, again, a well-diversified portfolio should contain both items from the antique side of the equation and also the collectible side of the equation. Now, before I even start here, I'm going to state this to you, and a lot of you are probably going to be surprised by this statement. Collectibles overall are growth driven. What I mean by that is they are comparable to certain high profile stocks, internet stocks, companies in their infancy. That's really what they are comparable to if we are comparing collectibles to that of the overall financial markets. Meaning comic books, trading cards, certain toys, obviously Pokemon, Magic the Gathering, they can be compared to Tesla stock or Amazon stock or Netflix stock or Facebook stock. All these companies that are up and coming and are growth driven. When we talk about antiques, in most cases, this would be compared to value stocks at present time. Your Dow Chemicals, your AT&Ts, your Exxon Mobils, companies that are pretty much already financially established. There's a market there, but if you're going to invest in a company like Exxon Mobil or Dow Chemical, you don't expect Dow Chemical to go up 3 times the stock price in the next week. It's not going to happen. It's not that volatile. It's not that speculative. Well, the same thing is true when we talk about antiques. They're more on the value investing side, where collectibles are more growth driven. Now, again, there are markets that strata both when we talk about coins, currency, trading cards. That's why I love investing in some of those markets, because they offer the best of both worlds. They're antiques, but they also operate like collectibles. So let's go through this. If you're going to invest in antiques, there are certain pros for getting involved in this market. For one, they can be truly unique and rare. I don't think anybody's going to dispute that. You get into the market for investment grade antiques, in certain cases, you are going after items that are one of a kind. This is unlike collectibles, where a lot of this stuff was mass produced. With antiques, especially if you go after the top 10%, the top 15% of the market, which is what we consider to be investment grade, a lot of these items can truly be scarce, rare, one of a kind. Another pro that you have on the antique side of the trade is that sometimes these items can sell for a significant discount. This is true if you come across an item that requires specialized knowledge, or maybe the seller doesn't even know what he has, and you can make an offer and you can get the item under market value. Antiques offer that availability more so than collectibles. Now, there is also a much more stable market to invest in over the long term. Let me use this as an example. If you're going after antique, rare, historic, investment grade coins, if you're going after Civil War memorabilia, if you're going after Revolutionary War memorabilia, and it's on the antique side of the equation, people have been collecting that stuff for decades and centuries, if not longer in some cases. As a result, those markets are much more stable than the market for Garbage Pail Kids, or even certain comic books, or even Marvel Universe trading cards. So when you compare those markets, obviously, in that sense, true antiques have the advantage. Now, another thing about the pros of antiques, most antique markets are not overhyped and speculative. I can tell you this firsthand. There are top tier dealers operating on the antique side of the equation that if I would name them on camera, a lot of you guys would have never heard of them. In fact, I'm probably going to do a video on that sometime in the future. Certain high-end dealers, introduce you guys to certain high-end auction houses on the antique side of the equation. Most of those markets are not overhyped. With collectibles, when we get to that, we're going to talk about hype-driven markets a little bit. As a matter of fact, if you go back and you watch some of the other videos I've done on this channel, I have talked about market manipulation, overhyped markets on the collectible side of the equation. Now, another advantage of investing in antiques is that there is less competition in certain markets due to the requirement of having to possess specialized knowledge if you want to speculate, if you want to invest in those markets, even if you want to become a collector or a dealer. For instance, if you want to get into the market for antique glass or antique furniture or even graded coins, graded currency, markets of that nature, firearms, edged weapons, you're gonna have to have specialized knowledge, guys. The barrier to entry is extremely high for that particular reason. As a matter of fact, right here, I'm looking at a book, The Encyclopedia of Glass. I made a lot of money with this book back in the day because I was able to apply the techniques that were taught in that, hit the flea market and antique markets, and pretty much profit off the knowledge in this particular book. Again, it's called The Encyclopedia of Glass. The average person that finds this book and spends $20 to $30 to get it and starts to read it, they're going to be bored with the information in there. Most people are not going to be able to apply it and make money. That is an example of a specialized market in the antique side of the trade. Now, I know what you're saying. Well, Sean, there's cons to investing in antiques. You're absolutely right. We're going to go through them next. So let me name some cons on investing in antiques. If they are not third-party graded, let's be realistic here. Outside of coins, outside of certain sports cards that are of a vintage and or antique era, most antiques cannot be third-party graded and encapsulated. Those items are less liquid overall when compared to collectibles. I'm going to be 100% honest with you guys. The market for antiques is not as transparent as the market for third-party graded collectibles. So if we're comparing any type of investment grade artifact, historical item on the antique side of the equation, and we're comparing it to a third-party graded collectible, the third-party graded collectible is by nature going to have more transparency. Now, another con that you have in this particular market, again, the barrier to entry is extremely high. You have to have specialized knowledge to operate and profit from a lot of these markets. I don't care if you collect vintage antique costume jewelry. I don't care if you go after Civil War era historical antiques and artifacts, if you go after edged weapons, coins, currency, guns, furniture, glass, whatever it is. You're going to have specialized knowledge, and that is going to take time to learn. You're not going to be able to get all that knowledge just from watching YouTube videos. You're actually going to have to put yourself out there, risk significant amounts of money and capital to learn those markets. And as a result, over time, you will start to profit from them. But it's not going to be as easy as investing in certain pop culture-based collectible markets. Now, another thing, there are only a handful of top-tier auction companies that control the antiques market with an iron fist. This is important, guys, and it's not discussed in any trade publication. It's not discussed on any other YouTube channel that I can find. I'm going to be doing a lot of videos on this in the future. If you get into the antiques marketplace, one thing you have to be careful with, you cannot burn bridges. There's a lot of companies in the antique side of the equation that are considered top-tier auction companies, whether they cater to mechanical bank collectors, vintage advertising collectors, collectors of Tiffany glass, collectors of art pottery, whatever the market is. You must understand that some of these companies control the market with an iron fist. You do not want to piss off some of these auction companies, some of these top-tier dealers, because if you burn bridges, guess what? You're going to get shunned out of certain collecting categories on the antique side of the equation. This is very important. Again, more videos are going to be made about this particular topic. Another thing you must understand is that there is a lack of transparency when buying and selling antiques over third-party graded collectibles. You can literally go to a top-tier auction house, buy an investment-grade antique that is considered deemed to be in near mint condition. You could take it home, set it in your house untouched for 6 months, come back, take that same antique that was noted as being in near mint condition when you bought it, consign it back to that auction house. The auction house may look at it and they may go, well, it's no longer in near mint condition. And you look at them and you go, what do you mean? I bought it from you 6 months ago. It sat in the corner in my house. I'm consigning it back to you. And now you're telling me it's only in excellent condition? Why is that? Because auction companies control the market. What they say goes. And number two, condition is not guaranteed on non-third-party graded items and artifacts. You must understand this. If you are dealing on the antiques side of the trade, there is a lack of transparency there. Be very careful in these markets. Another thing you need to be aware of is in certain markets on the antique side of the trade, while they can be great investments, they can be very profitable. In certain markets, there is a limited number of buyers and a lack of instant liquidity. What that means is you may have an antique or a historical item that is worth $50,000. Unlike a comic book, unlike a coin, unlike a trading card, unlike a vintage toy, finding a buyer for that particular item takes a little bit more time than just calling up a dealer, calling up an auction house, or going on an internet forum. Antiques at certain times are usually less liquid than that of collectibles. This is something that a lot of people do not understand. This is why whenever you have like a wealthy person who dies and they get inherited like a collection from somebody else that they were related to, and they have a house full of antiques, this is why a lot of times their items don't go for top dollar, because they need to settle the estate and they're willing to take less. As a result, a lot of the sharks, a lot of the piranhas, they smell blood in the water. They come out and they offer literally 20, 30, 40, 50, 60, in some cases 70% less than retail value for these particular items and artifacts, because they know it's going to take longer to find a buyer in that particular market. Now, those are the pros and the cons of investing in antiques. Now, we're going to talk collectibles. Collectibles, by their nature, the barrier to entry is quite low. There's little specialized knowledge required to get into this type of market. If you want to flip Pokemon cards, if you want to flip video games, if you want to flip toys, if you want to flip comic books, whatever it is, if it is on the collectible side of the equation, the barrier to entry is quite low when compared to flipping investment grade antiques, obviously. So a Timmy, a Kimmy, a Poindexter who wants to get into these markets, they can easily get in on the collectible side. They're not going to have too many problems. Everybody pretty much knows what a Pokemon card should look like. Everybody knows what a Magic the Gathering card should look like. Everybody knows what a vintage video game should look like. As a result, not too much specialized knowledge is required to buy and sell those particular items on a regular basis. Now, another pro about collectibles is that they are overhyped by collectors and auction houses and the media. Now, you may think that that's a negative thing, but what it does is it keeps pop culture-based collectibles in the consciousness of consumers, of would-be collectors, of speculators, and investors. And as a result, that creates more of a diverse market for those particular items. Now, there's also a negative side to that we're going to talk about when we get to the cons. But for right now, understand that that is good for the overall collectibles marketplace. Another thing that you have going for you, if you are buying collectibles, is the nostalgia factor. There is a stable secondary market due to the internet, due to the fact that right now Marvel movies are all the rage. People are going after vintage toys with the return of Star Wars, with all these pop culture markets making a comeback in the year 2021 and beyond. These markets are going bonkers at present time. So if you are speculating over the short term, you can make a lot of money in the collectibles trade right now. It is a good place to be over the short term. Over the long term, the waters are a little bit murky. But in the short term, you can make a lot of money in these markets. Now, if the collectibles in question are third-party graded, they are easier to sell and more liquid. Now again, when we talk about coins, when we talk about antique sports cards, when we talk about currency, those particular markets strata both the elements of the antiques trade and the collectibles trade. So if you are in those markets already, it doesn't matter whether you classify them as an antique or a collectible. Just know if they are third-party graded, they are much more liquid, assuming they are in demand. Meaning if you have an item that is already in demand and it's in high grade and you get it third-party graded, it's going to even bring you more liquidity when you sell it online through an auction house or even through a dealer. So that's important to note. The final pro of selling collectibles and buying collectibles is the fact that multiple selling platforms exist. You have Heritage Auctions, you have Comic Link, you have Certified Link, you have Hakes, you have Morphe's, you have internet selling forums, you have smaller auction houses, you have eBay, you have PWCC, you have all these companies that cater to the collectibles trade. This is opposite of what's happening on the antique side of the equation, where pretty much only a few top-tier auction companies control the market with an iron fist. That is, if you want top dollar for your items. Now, you can argue with me and you can say, Sean, there's smaller auction houses that will take those particular antiques as well, but you're probably not going to get top dollar for them. And that's something that you got to understand when we get to those videos where I talk about liquidating an antique collection versus liquidating a collectibles collection. There's different strategies you need to employ if you're selling antiques versus that of selling collectibles. Now, going to the cons, there are cons of investing in collectibles, and we've talked about these in depth on this channel. But putting it together for you, the collectibles marketplace, by its nature, is easily manipulated. Now, let me state that again, because we're 21 minutes into this video, and my voice is already starting to go. The collectibles market, by nature, is easily manipulated. This is what a lot of you guys do not understand who are investing over the long term on this side of the equation. A lot of these markets are easily manipulated. Let me say that again for the Timmies, the Kimmies, and the Poindexters who don't seem to understand what is happening in the year 2021. The collectibles marketplace is easily manipulated. Hint, hint. The next con you have is that most collectibles are not rare and scarce, with few exceptions. Now, you come to me, you say, Sean, I have a Batman 1 in CGC 9.4 condition, and it's the same one that just sold for $2.2 million on Heritage. I'm going to tell you, guess what? You are in the top 1% of the total collectibles marketplace. That item is, by its nature, both scarce and rare. So there are exceptions to this. If you have an Action Comics 1 in any grade, that is a very rare and scarce comic book. But overall, most collectibles were mass-produced. They are not scarce. They are not rare by their nature. You know, I just found a story online where a factory-sealed copy of Pokemon Blue for the Nintendo Game Boy was found in an attic or a house. And people are going, oh my gosh, this is amazing. I told you guys, a lot of these items are going to start to come out of the woodwork as people discover them and realize that they are valuable collectibles. There's no such thing in most cases as a one-of-a-kind mass-produced collectible, unless if it's something like a Batman 1 or an Action Comics 1 in extremely high grade. Most of these items were mass-produced. Another problem that you have with the collectibles marketplace is third-party grading companies can make or break the collectibles market overall. Now, what does this mean? Well, we look at coin grading. Coin grading is pretty much dominated by both PCGS and NGC, with few exceptions. On top of that, you now have another layer of transparency with the development of CAC stickered coins. So what this is doing is it is creating chaos in that particular market. If we want to talk graded video games, Wata Games, like it or love it, they came in and I'm going to say it, they manipulated the collectible video game market. So at present time, you have people going bonkers for graded vintage video games when 5 to 10 years ago, nobody cared about graded video games. If you go back and you look at the origins of VGA, the first third-party grading company for video games, nobody was going crazy bidding up factory-sealed copies of Super Mario Brothers or Pokemon or The Legend of Zelda or Kid Icarus literally 5-6 years ago. When Wata came in, they kind of kind of manipulated that market, and as a result, gave rise to a lot of collectors, speculators, market manipulators, and market makers that are trying to convince you that great video games are going to be the next big thing. Another problem you have with collectibles is that most collectible markets are volatile and not stable. Now, this is unlike what's happening on the antique side of the equation. Most, not all, there are exceptions to every rule, but most antique markets are more stable than that of collectibles. Now, going back to what I said originally as to how collectibles are on the growth spectrum of the overall market, this makes sense because a lot of you people out there that are speculating in a lot of these markets on the collectible side of the trade, you like the volatility. You guys tell me it's like riding a roller coaster. You love when your Magic the Gathering collection of reserve list cards goes up 20%, falls 30%, then goes back up 50%. And if you sell at that time, you can make money. But you have to understand, over the long term, you are investing in an extremely risky market. You have to be very careful if you are placing a lot of money on this side of the equation, guys. Trust me on that. The final con to the collectibles market is that speculators can influence the market more than collectors, dealers, and in some cases, investors. You have collectors that come into this market and they go, you know what? I'm going to go after an Amazing Spider-Man 300 in CGC 9.8 or a Walking Dead 1 in CGC 9.8. Now, this is the part of the video where I'm going to get a lot of thumbs down votes. But let me explain this. Go look at the census and tell me how many copies of Amazing Spider-Man 300 exist in CGC 9.8 condition. Then try to argue that that book is a good investment over the long term. I'm not talking about over the short term. Right now, we are in Marvel movie mania. Whatever Disney or Marvel Comics puts out, it sells. There's a lot of speculators coming into this market. There's a lot of starry-eyed investors, people that don't know what they're doing, that will bid up a copy of Amazing Spider-Man 300 in CGC 9.8. I'm not saying it's a bad investment over the short term, but over the long term, I would not be going into the marketplace in 2021 buying a copy of Amazing Spider-Man 300 in CGC 9.8 and keeping it for 10, 20, or 30 years. In my opinion, it is too much of a risk as to how I analyze these markets. So what I am attempting to prove to you by doing this video today is to show you that even if you invest in antiques or even if you invest in collectibles, there are pros and cons of each that you have to be aware of. So if you are one of the people that come on this channel and accuse me of being biased, where I only love antiques, or I'm sadly against investing in collectibles over the long term, you are sorely mistaken. But you got to understand, most smart investors analyze these markets from this standpoint. They don't look at how much money they can make. They look at the risks and the rewards and how much money they can potentially lose by getting involved in some of these markets over the short term or over the long term. I hope you learned something from this video. If you did not, please let me know in the comment section below. Thanks for watching. Have a great night, and I will see you all in my next video.